Welcome to Yahoo Finance Sports Report, a unique look at the business of sports, brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'm here to coach you through the financial game. We'll look beyond the headlines, analyze all the latest sports news, the teams, trades, and billion-dollar deals, so you and your portfolio will win big. This week, we're talking about the new commissioner of NASCAR, the SEC's March Madness earnings, Deion Sanders' new contract with Colorado, and so much more. I'll also be joined by Mark Wright, the Vice President of Media Services and Sponsorships at AT&T, to discuss the business behind March Madness and the Final Four. Let's huddle up and get right into it. All right, it's time for this week's Pomps Playbook, where I take a look at some of the biggest headlines in sports that you and your portfolio need to know. First, I'm talking about the impending sale of Real Salt Lake and the Utah Royals. Last weekend, multiple reports broke that billionaire David Blitzer is in deep negotiations to sell his controlling stakes in Real Salt Lake of MLS and the Utah Royals of the NWSL. Reports indicate that Blitzer is set to sell both franchises to the Larry H. Miller family, the former owner of the NBA's Utah Jazz. However, Blitzer is expected to retain a limited stake in the franchises, both of which he has owned since 2022. Blitzer purchased Real Salt Lake and Rio Tinto Stadium 3 years ago for $400 million from the previous owner, Del Loy Hansen, who sold the franchise after being accused of racist and sexist behavior. Blitzer also gained control of the rights to an NWSL club in Utah for a heavily discounted preset expansion fee of just $2 million. As a result, Blitzer eventually revived the Utah Royals franchise in 2023 with Utah Jazz owner Ryan Smith after the team shut down previously in 2020. Now, no purchase price has been reported for Blitzer's sale of Real Salt Lake and the Royals. However, Sportico values Real Salt Lake at $525 million, which includes the Royals franchise worth an estimated $70 million. So if Blitzer were to get $525 million for the franchises, that would represent a 31% increase on the initial $400 million investment he made just 3 years ago. Next, I'm looking at a major shakeup in NASCAR's leadership. On Monday, NASCAR announced that President Steve Phelps has been promoted to the new position of NASCAR commissioner, with Phelps becoming the organization's first ever commissioner. Former NASCAR Chief Operating Officer Steve O'Donnell will assume the role of president and lead the day-to-day management of NASCAR's operations. The move is a significant change, as NASCAR will now follow a corporate structure similar to other North American sports leagues, with a commissioner at the top. In his new role, Phelps will lead NASCAR, the International Motorsports Association, and NASCAR's 15 company-owned racetracks. But more importantly, Phelps will use his commissioner position to focus on strategic growth and international expansion for NASCAR. Phelps has already overseen major growth for the sport, recently securing a 7-year, $7 billion media rights package for NASCAR with Fox Sports, NBC, Warner Brothers Discovery, Amazon Prime Video, and the CW. NASCAR has also made its intentions clear to boost their international standing. The organization will hold its first International Cup Series points race this summer in Mexico Series. NASCAR has also explored holding a Cup Series race in Montreal and has been in talks with countries in the Middle East and India about staging events too. The sanctioning body has also considered holding Cup Series races in Europe. Now it's up to Steve Phelps to convert NASCAR from an American racing series into a global motorsport. We'll end Pomps Playbook today with the SEC's new NCAA March Madness record. After sending a record 14 of its 16 teams to this year's men's basketball tournament, the SEC will make major money as a result. The SEC is set to earn a record $70 million in March Madness payment units after its success in this year's tournament. Now, the NCAA uses a unique formula to pay out hundreds of millions of dollars to conferences annually based on their success of their participating teams in March Madness, with each game reportedly being worth around $2 million in unit payments. By next Monday's championship final, the SEC will have played in 35 games to earn 35 units worth $70 million, beating the ACC's previous record of 25 units in 2016. The $70 million in tournament earnings is also a huge win for SEC Commissioner Greg Sankey. Since 2015, Sankey has worked with SEC schools to push higher salaries for top coaches. He improved the conference's officiating quality, and they have increased the SEC's self-promotion of its basketball programs. NIL has also played a huge role in the SEC's basketball rise, as schools with rich alumni bases have helped lure top talent to the conference. And the best may still be to come for the SEC. The conference has 2 schools, Florida and Auburn, in this weekend's Final Four, and a real shot at winning an NCAA title. This week for the deeper dive, where I give you a play-by-play analysis of news in the sports world and its significance to your bottom line. We're recapping the first season of Tiger Woods and Rory McIlroy's tech-infused Arena Golf League, TGL. Now, TGL's first season ended last week when the Atlanta Drive franchise won the league's inaugural championship. The indoor tech-enabled golf league had its share of ups and downs in year one, but I think TGL is one of the most undervalued properties in sports, and the data shows encouraging signs for the future viability of the league. Given that media rights are the primary revenue driver for every major sports league, TGL's most encouraging sign in season one was its TV viewership. TGL averaged 513,000 viewers for its first regular season and delivered a total audience of 19.3 million viewers across ESPN platforms. Viewership did range from about 1 million viewers for TGL's most popular matches to 160,000 viewers for its least watched match on ESPN2. But there is some important context to these numbers. Top-line viewership for TGL is a bit misleading because its matches rotated between ESPN and ESPN2, and TGL's condensed schedule pushed some matches to early afternoon windows that typically garner less viewership. Believe it or not, there is actually a sizable difference between matches airing on ESPN and ESPN2. And while 300,000 viewers may not be a big hit for ESPN's main channel, it's a massive outcome for its less popular channel in ESPN2. Plus, when you compare TGL matches to the same broadcast window from ESPN's schedule in 2024, which mainly featured college basketball and NHL games, TGL outperformed those time slots by 21%. TGL reportedly exceeded ESPN's expectations in year one, especially considering that the network paid less than $10 million to broadcast the league that season, according to CNBC. TGL also gives ESPN massive advantages as a product. This year, the median viewer age for TGL was 51.4 years old, making it the second youngest sports league behind the NBA at 50 years old, and much younger than the PGA Tour's median viewer age of 63. And unlike traditional golf, which isn't the greatest TV product with 4-day-long tournaments and rounds that last more than 4 hours on average, TGL was specifically built for television. It's a different kind of golf, sure, but it's still golf no matter what the sports purists say. Every match takes less than 2 hours. There's a shot clock to speed the game along. Mic'd up players create weekly viral social media clips for the league and ESPN. And the broadcast has tons of advertising opportunities baked into it. And it's not like TGL is going to replace the PGA Tour. In fact, the PGA Tour took an 18% equity stake in the league because of the massive potential it presents for the game of golf as a whole. Plus, even though Live Golf has spent over $1 billion on player contracts and tournament expenses, TGL averaged about 5 times more viewers in season one at a fraction of the upfront cost. However, TGL still has plenty of work to do. The league has things to improve, like establishing a more consistent schedule for TV viewers. But overall, TGL is off to a great start, and it will be fun to see how the league evolves over time. And the good news is that TGL has proven there is demand for its new age golf product. Now, the next step is to grow their audience. This week for my one-on-one, I'm joined by Mark Wright, the Vice President of Media Services and Sponsorships at AT&T. Welcome to the show, Mark. I want to talk about how AT&T specifically is utilizing their sponsorships department when it comes to March Madness and some of the other marquee events on your calendar. So speaking of March Madness, what do you say is the value proposition to AT&T specifically for this tournament?
Yeah, so thank you, Joe. This sponsorship it predates me arriving at AT&T, one of our longest lasting, if not the longest lasting partnerships we have on the books. It goes back some 23 years, started, I think, under the Singular Wireless brand, now AT&T Wireless. And it really is an opportunity, I think, in the purest form to tap into what is arguably one of the most passionate fan experiences in the United States, right? It is, I always think about this as like the quintessential connectivity experience, right? And for a connectivity company, as we say here, connecting changes everything. This is a sweet spot, right? I mean, first of all, it's 3 weekends long, right? It's not a one and done Super Bowl or, one game marquee matchup. This thing goes on for 3 weekends. It captures the imagination of so many different fans out there, right? From the actual students to alumni to parents, et cetera, for a company that has kind of grown with the tournament. This is right in the sweet spot of connectivity because you got to stay attached to what's going on in this tournament.
Obviously, March Madness has grown. It's become more important. The TV ratings are huge. The contracts around that are even bigger. But I imagine this has sort of changed your guys' approach when it comes to the tournament itself. So I'd love to just hear more on just obviously the partnership stuff, but even activations and things like that, just how this partnership has changed and evolved over the years.
Yeah. So, Joe, I mean, it is, gosh, I don't even know where to start on that because there's so many different touch points that have grown, right? First of all, I mean, it went from 64 to 68. You got a first four play in. You've got the actual distribution of the games, right, has changed. Where in the past it was on CBS only, it was a linear proposition, and you had to download in this kind of I'll call it challenging proposition on digital to now a March Madness live stream that has grown every single year and now is as big as the games themselves on linear TV. Our proposition, I guess, on the ground, on site, has grown from the concerts that take place on Friday, Saturday, and Sunday. Ours is on Friday to the treatment even of the halftime guest, right? That is AT&T at the half. And every game, right, being presented now uh, on some kind of a live platform with the introduction of the Turner networks, right? So that wasn't the way it was in the beginning, and that deal changed it. So I would say almost everything from viewership to how we treat the proposition, whether it be on the ground or on the air, and then certainly the growth of the women's tournament, right, over the last 4 or 5 years has just been amazing. And we've always been at the center of women's sports, whether it's the WNBA and or the women's Final Four, but that has certainly grown. Uh, our presence in Tampa will be the biggest it's ever been at the women's Final Four.
Yeah, and what was the thought process behind that, right? Like, if you look at sports today, I think women's sports specifically, and certainly March Madness around the women's tournament has become a great asset for brands to leverage to be able to get more exposure and things like that. And I know a lot of different brands have been looking at that over the last couple of years. But as you mentioned, AT&T was sort of one of the early adapters more than a decade ago to really invest and put assets towards women's sports, March Madness, but other ones as well with the WNBA too. What was the driving force behind that, and why did you guys think that was going to be so valuable in the future?
Well, I think you start from a place of gender equality, which is something the company has always believed in and supports. Whether it's with the women's national soccer team and the success they've had in at World Cups and in the Olympics, or it's the WNBA and our charter position there when we did our deal with the league some 7 years ago, or women's Final Four and our support of that on ESPN, the broadcast partner, right, of the NCAA. But mostly, Joe, it's because it's good for business, right? Marketing to you know to that consumer set is good for our brand and our business, our products and services. So I'd say that's at the heart of it, and certainly capturing fan passion across the board.
Yeah, has NIL specifically changed the way that you approach college sports in general, but I guess more specifically March Madness and men's women's college basketball?
Yeah, so well, I think the most obvious change, right, that NIL has had on us is the opportunity to tap in to the actual athletes that are competing. We have used this year, as you probably are aware, uh, two participants, one that has just become an absolute cultural phenomenon in some ways, in Cooper Flag, and the two UCLA players, Kiki Rice and Lauren Betts. Both of them are in our ads. Both of them talk about the AT&T guarantee and how we want that to be expressed, right, in those given commercials, and how we're trying to market those products and services. So the NIL opportunities just opens the door to actually go in and work some kind of a relationship with these athletes, where in the past that obviously didn't exist.
Yeah, and how do you measure the success of a partnership like this, right? Like, I think everyone understands that the exposure is super important. You're going to get a lot of eyeballs on the brand and everything like that. But are there any internal metrics or things that you guys look at to quantify or measure the success of a large partnership like this?
Yeah. So I think I would say it's two fronts, right? And this is the case in most of our partnerships that we have, not necessarily just March Madness and Final Four. One is absolutely on brand attributes, right? Did we drive brand love, if you will, right? Brand relevance, brand awareness, brand relevance, brand consideration through these associations, whether the association is at a high level through AT&T and the NCAA or AT&T and the NBA, and then ultimately trying to drive that through the funnel, if you will, to a purchase, right? And we have other metrics we use in terms of driving that through the funnel, but primarily it is about brand love, and did we improve on that through these relationships, and we have a number of ways to measure that.
We've got to take a quick break, but we'll be back with more of my conversation with Mark Wright right after this. Welcome back to Yahoo Finance Sports Report. I'm your host, Joe Pompliano. I'm here with Mark Wright, the Vice President of Media Services and Sponsorships at AT&T. Yeah, so we talked a little bit about how you measure kind of the effectiveness of the campaign, but is there things that you do on the front end to determine whether you should even get involved in something?
Yeah. Well, I would say the first screen, right, is does it actually work for AT&T's brand offering, right? Our products and services. Is that uh, an opportunity, content wise, that we think fits the overall AT&T brand? And I think the second consideration is scale, right? We're a big company. We have millions of customers out there. It's a super competitive category, as you know, Joe. How we try to grow that through acquisition or a trade up of our current customer base, you really have to have scale. Certainly, March Madness has that. And then you have to look at the portfolio of assets, whether it be sponsorship or media, and uh, how that potential asset that you're thinking about acquiring fits right into it, whether it fits from a strategic perspective on reach, and how it fits in your overall calendar, right? The annual calendar in your business.
Well, you sort of sit in a weird spot where you're hoping that the entire tournament performs well and as many eyeballs as possible are on your brand. But is it fair to say
Right.
that you're hoping that Duke wins because of your relationship with Cooper Flag?
No, that I'm not going there. This year is interesting, right? Like, it's only the second time ever that all four of the number one seeds have made it to the final four. You place some bets, and even if Duke had not won into the final four, I think you would still have incredible mileage on the Cooper relationship. Yeah, as you probably know, we're an official with the NBA as well, and striking a relationship with Cooper uh, works for us on both fronts, right? We hope that he goes on to have a successful career in the NBA and is projected to be the number one pick. And so that kind of crossover, I think, would work for us. But I've been doing this a long time. I got over rooting for one team or one league over the other a long time ago.
That's very fair. Well, Mark, thank you so much for joining us today. It's awesome to learn about how AT&T is leveraging some of the sponsorships, specifically across March Madness. But this stuff is fascinating, so I appreciate your time.
You're very welcome, Joe.
The clock is winding down here, but we have just enough time for some final buzz. So let's talk about Deion Sanders' contract extension with the University of Colorado. Last Friday, the University of Colorado announced that head football coach Deion Sanders agreed to a 5-year, $54 million contract extension. The extension will double Sanders' salary to an average annual value of $10.8 million to make him the 8th highest paid coach in college football after a 9-4 season last year that included a Heisman Trophy win for two-way superstar Travis Hunter. Now, Sanders' base salary will stay the same at $500,000 per year. However, his supplemental salary for things like PR, football program promotion, and fundraising will double in the new agreement. In addition to the increased payments, Sanders will also get a $300,000 allowance per year for a private jet, a country club membership, and access to 2 SUVs. With the new contract signed, Sanders is now committed to Colorado through the 2029 football season. And the deal calls for Sanders and the Colorado Buffaloes to, quote, meet and confer in good faith at the conclusion of the 2027 season to talk about a possible contract extension, which means Sanders could be in line for an even bigger payday in 2 years if all goes well in Boulder. Now, some college football fans may think it's too early for Colorado to make Sanders one of the highest paid coaches in college football. However, I maintain my long-held position that this new deal is still a bargain for the University of Colorado. Why? Well, because even in just 2 seasons, Deion Sanders has had an outsized impact on the University of Colorado's business. Colorado says home football games have had an economic impact of $94 million since Sanders' arrival. Last year, the University of Colorado saw a record 68,000 applicants for the fall 2024 semester, a 20% jump from 2023 that resulted in a 3.4% increase in student enrollment. Plus, with more applicants, Colorado can place a premium on accepting out-of-state students who pay $34,000 in out-of-state tuition annually versus $12,000 for in-state students. So at the end of the day, whether you agree or disagree with the extension, one thing can't be denied. Athletics are the front door to a university. And by doubling down on Deion Sanders' coaching salary, the Colorado Buffaloes are simply doing good business. We're all out of time, so it's officially game over for this week. Thank you so much to Mark and all of you for joining us. Make sure to tune into Yahoo Finance Sports Reports on Thursdays at 5 p.m. wherever you get your podcast. I'm your host, Joe Pompliano. See you next time.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.